Forget the North Pole, warehouses are holding a growing number of holiday gifts as shoppers move online and retailers ship more goods than ever before. And that means big growth for the companies that own those properties, warehouse REITs. And now some call them a hidden buy for investors looking to cash in on the gains since Election Day. Diana Olick explains.
In Cranberry, New Jersey, developers are taking down this office building and planning to replace it with a warehouse. Demand for warehouses, especially close to major metropolitan areas, is skyrocketing. And so is the potential for real estate investment trusts, or REITs, that own these spaces.
In contrast to a lot of other commercial real estate sectors where you've seen a deceleration of tenant demand, in industrial you've seen an acceleration due to e-commerce.
REIT stocks have lagged the rest of the booming stock market because investors tend to buy them when interest rates are low. REITs offer high yields in the form of big dividends. But investors then sell them when rates are rising, as they are now.
I think usually you see, in reaction to a rate increase, REITs falling, and then 6 months later they come right back because the better economy improves operations for REITs.
Mogadam is CEO of the largest industrial warehouse REIT in the nation, Prologis. E-commerce represents just 10% of its portfolio, but makes up nearly 1/3 of its current growth. Tenants include FedEx and Amazon. Prologis is developing the largest warehouse park in the nation an hour outside San Francisco. The idea is to be as close as possible to major metros as e-retailers strive to deliver goods in hours rather than days.
What I call the last 30 or 50 mile business, where we're building large warehouses in major metro areas that cover the entire metro area for major e-commerce players.
Other warehouse players like DCT Industrial Trust have a similar strategy.
They've positioned their portfolio so that most of their portfolios are now located in very large metropolitan areas, which has seen a disproportionate increase in demand from e-commerce.
The stocks of warehouse REITs have fared better than other REIT sectors, and while they might look expensive, they're still selling at a discount to underlying values. The one wrench, however, trade. Warehouses rely on two things: trade and consumption. If trade sinks under the Trump administration, so too could the value of these REITs. For Nightly Business Report, I'm Diana Olick in Washington.